Something called Dogecoin, created as a joke, is valued at close to $36 billion. The stock market seems to be reaching for the moon, and headlines about a global bubble are flashing red warning signs. So, are we in a bubble? More importantly, what is a bubble and how do we recognize one, and what should we do with our investments? Take a look at this video to find out. Hi there, I'm Michelle. Welcome to my channel, where we talk money and having more of it. In this video, we are going to take a look at what stock market bubbles are, how to recognize one, and what to do about it when it comes to your investments. So what is a bubble? Well, a financial bubble is typically where it seems most market participants are acting irrationally and ignoring the common sense value of the assets in the market. As a result, the prices of assets in that particular market become excessively expensive. It's really difficult to recognize a bubble, especially when new technologies are coming online and possibly having a potential customer base we haven't ever seen before. As such, it's mostly in hindsight that we recognize we were in a bubble. In the 90s, it was the internet stocks, and now in the 20s, it seems to be anything that has a seemingly disruptive technological angle and as yet unknown market opportunity. So given that it's exceptionally hard to identify these bubbles, what are the signs that may indicate we are in one? Let's take a look. The first sign is where financial results become secondary to the company story. We love stories, and stories have a way bigger impact on our willingness to act than cold hard facts do. Tesla's valuation, for example, is more than that of a number of the largest established car makers combined. Investors believe in Elon Musk's story and the vision he is creating, and as a result, they buy into a yet unproven bigger proposition picture. Now, whether this is correct or not has been the subject of much debate, but the bottom line here is that the valuation speaks very much to the story rather than the numbers. And while maybe one or two or even more of these stories may be very viable, when the entire industry is lifted by a single story and starts to feature all-round exuberance, this is a sign that there is a possibility that things are becoming overheated. The second sign is that the herd mentality sets in. Bitcoin has been hitting all-time highs. Even long-term detractors such as JP Morgan have changed their stories and are now strong Bitcoin proponents. We all start to feel that little bit of FOMO and a desire to participate in the riches, and it drives us to jump in without stepping back and realistically assessing whether it makes sense. Warnings of the opponents to it, the idea, become disregarded as negative voices of those who have lost touch with a new way of doing things, and the herd marches on, largely ignoring any warning signs. The third thing is that the conditions in the market are supportive to the formation of bubbles. Bubbles need a supportive condition to grow, and this would typically include low interest rates where borrowing, spending, and investing is encouraged. Secondly, that new and innovative products or technologies are being developed, stoking investor demand and leading to price increases. And we saw this with the recent listing on the stock exchange of Airbnb, a disruptive vacation rental platform, and also of Snowflake, which is a cloud-based data management company. And even saying that name makes it sound cutting edge and high-tech. Well, soon after listing, the share prices of these companies shot up at a fast rate. Third thing that can potentially lead to these bubbles is there's a shortage or perceived shortages in a particular asset, which causes its value to rise. And Bitcoin comes to mind with this, with its finite supply. So, red flags in the market would be rapid increases in asset prices, a lot of demand, trading, and participation and the word of mouth factor, where everyone you speak to has something to say about that asset. So as I said earlier, hindsight is golden, and being in a bubble and knowing you're in a bubble are two very different things. You're most likely to really only know that you're in a bubble after it burst. And just to be clear, I have nothing against Tesla or Bitcoin or their valuations, but the market is very, very frothy right now, and there are questions around certain valuations. And I think it's important to recognize that things are hot and potentially we could face a downturn in the future. So what should we do about it when it comes to our investments? Well, the first thing you can do and should do is build a portfolio that matches both your risk tolerance and your capacity for risk. If you're young and have many years of investing ahead of you, you can afford to take more risk, and you can even look forward to a stock market crash because it means everything has gone on sale and you can buy assets cheaply. However, if you're close to retirement, it's good to have some assets in your portfolio, such as bonds, which provide a capital preservation element to your portfolio. In addition, by building a well-diversified portfolio across different types of assets without being overly concentrated in any one asset class, you give your portfolio the resilience and flexibility to face these challenges. The second thing is to increase your cash buffer. Market downturns can have unexpected consequences overall. And if you're not 100% comfortable that your cash buffer is up for the job of providing a cushion should things go downhill, use the good times to build up your reserves for the not so good times. Lastly, remember you are in a long-term game. Markets go up and they go down, and they will continue to do so. So remind yourself not to panic and not to sell when the market is down. Keep your eyes focused on your long-term goals and the big picture. So if you're getting ready to face some market challenges, it's important to check your financial resilience. Take the financial intelligence quiz in the notes below to assess how ready you are. If you like this video, please let me know by liking it. Share it with any other ladies ready to change their financial stories, and comment below if you found anything helpful. For financial education and money talk designed for women, subscribe to my channel and hit the bell to be notified of when I post a new video. Thank you so much for listening to my video.